Or rather, you've been a part of the market when there was a bull run.
I was not really hurt by the 2000 boom or by the 2000 bust.
What you would have heard is probably folklore in real time, not like what a normal investor hears. Why didn't you believe that?
There was no real FOMO for me saying I need to participate in that. I thought if it is good, it will be there.
How did you manage the FOMO?
All that, so it was very difficult to understand from the balance sheet what was happening. So I knew something magical was happening, but I didn't know how to participate in that. Between a Silverline balance sheet and an Infosys balance sheet, I did not have the skill to know which was good and which was bad. When a bubble is being built, the only way you can protect yourself is to stay away from the bubble.
What people are telling today is that probably in their perspective, Zomato is the Infosys of today and that it could grow like that.
So if you take the Infosys journey, it is not 93 to 2021 that you should see. You should see it in various stages.
Do you feel now like trying a Zomato?
When I look at buying a big stake, I'm first asking 10 years later, will they survive? 20 years later, will they survive?
What happened in that blowout phase of 2000?
And I used to laugh even then, saying if you create a furniture.com,
Hits.
furniture.com, they said everybody will buy the furniture there. Then you created an IR.com and you said all IRs will buy everything there. Then you created charteredaccountants.com and said all chartered accountants will do their shopping there. What about the IR chartered accountant? Where was he buying furniture? Was not clear.
And what happened to the investors who bought the secondary and tertiary companies in tech? What happened to them? And what happened to those companies?
Shyam, the chance of picking up a fraud was much higher than chance of picking up a good company. Clear signals you're getting that staying away won't hurt you too badly. Studying failed companies is very important to know why companies succeed.
Subra, I'm going to talk to you about bull runs now. There have been so many bull runs you've participated in. Or rather, you've been a part of the market when there was a bull run. I wanted to ask you about your participation. I mean, in the bull run, there would be a trend. Let's say 1992 was Harshad, 2000 was tech, and 2008 was infra and power. And now you have the small and mid cap boom, which you've seen in 2017-18. And then there have been also various minor booms, like you had the GDR boom of 94, and now you have the FMCG boom that you're seeing, pharma boom you had last year. So these shorter cycles are also there. Have you participated in one or more of these, and what has been your experience? I wanted to specifically ask you about 2000 because it was, in my opinion, one of the biggest bull markets.
2000, funnily, my portfolio didn't participate because I have very little tech. A very big investment banker had asked me to buy Infosys. I bought it at 300 and within 45-50 days it went to 700 or 750 and I sold out. Right? So that's my participation. I was not very convinced. I didn't understand tech. So I didn't have much tech with me, so I did not really participate in that boom. Little bit maybe I participated through mutual funds, but that's about all. So I was not really hurt by the 2000 boom or by the 2000 bust. So I didn't really participate. I still had my FMCG and pharma and engineering and all that, which didn't really participate in 2000. They participated later.
Much of the benefits and early sightings have been done by people you know quite well and you're constantly in touch with. And I'm sure they would have told you many times about the story as it unfolded. And what you would have heard is probably folklore in real time, not like what a normal investor hears. Why didn't you believe that?
I really didn't know because I didn't understand technology and I had no clue that we create such a huge impact. So I got into technology much later. Right. So initially when I said I'll invest in Infosys, you get a planned visit. He said, Subha, there's a problem. They'll all call you uncle. I was just 30 years of age when Infosys came of age in the market. I was 30, 32. I said, they'll call you uncle, and you'll not understand anything. There'll be some satellites and some computers, and there's nothing, no plant to visit. So these things, I never understood what was happening. It's like, looking at Zomato now, I don't really understand. I'm not saying it is overvalued or undervalued. At that stage, I was not able to understand. So small positions I had, but not enough to create an impact, or there was no real FOMO for me saying I need to participate in that. I thought if it is good, it will be there. I mean, I always thought the other companies of mine will also participate in the boom. So no, surprising, but I was not hit by FOMO because I was young at that age. So
you were still holding your traditional investments?
Yeah, I was still holding my traditional investments. I had my banks. And
what will you do? The markets are booming every day and your stocks are not participating, because one of the most polarized markets, I would say, 2000 was. There's only one sector going up every day for days together, and then in that also you had two universes. One universe of good companies like Infosys and Wipro and the likes. TCS was not a listed company then. And then you had the other universe of companies which
are not there today.
Yeah, which don't exist today.
Yeah.
So how did you manage not even to look at them? I mean, did you look at them, or what? How did you manage the FOMO?
No, actually, funnily, I met some of those promoters. I met Silverline, and I couldn't understand what they were doing. They were, these were not pure software companies. They were doing a lot of hardware also. They used to buy and sell and all that. So it was very difficult to understand from the balance sheet what was happening. Some of these companies showed a lot of cash. And when you spoke to the vendors, their bills were being delayed by 90 days. You couldn't believe the balance sheet. In the cement factory, how many bags of cement will be made. Here we couldn't understand. One floppy disk, as we used to see it, could be worth 10 lakhs. How did I didn't just understand the business. I was like a banker of those days. I didn't know against what I was lending. Right? So again, what am I investing? What are they doing? How they will add value? I was getting stories from IIT Bombay saying people come from New Zealand and just recruit. He could be MTech in, say, civil engineering, but they wanted engineers. So I knew something magical was happening, but I didn't know how to participate in that. And honestly, it was still early days when I didn't know the difference between an HCL Tech, Silverline and Infosys. It's very difficult to make out, and you didn't even know how much was genuine exports.
You're saying that unlike now, the differentiators then were fewer, and companies did not have the kind of USPs that they boasted in the subsequent 2 decades.
Correct, and between a Silverline balance sheet and an Infosys balance sheet, I did not have the skill to know which was good and which was bad. There was nothing you could know. You could speak to some people and they would also say something, US they are doing something, and things like that. You didn't understand.
You felt the whole universe of stocks and the investment universe was looking vague to you.
It was looking vague, and I did not have the capacity to know that this is a good company or this is a bad company. If there was a tech fund, maybe I would have looked at a tech fund.
So staying away was a decision born by what you believed was a lack of understanding. It was not born out of a conviction that these guys are up to something wrong and I don't want to own them. Like even with some of the companies you mentioned, you didn't go to that point.
Yeah.
You just stood away.
Yeah.
That was the thing.
Because I realized one thing, when a bubble is being built, the only way you can protect yourself is to stay away from the bubble. Because you cannot short a bubble. Let me just give you an example of Silverline. I thought Silverline was overpriced at 30 rupees. At 30 rupees, they launched a buyback. It went to 300, then it went to 900, then it went to 1300. And I used to tell people, I thought 30 was a good price to sell. And if you ask me at 1300, I may say maybe it's a good price to buy. Because I had no clue why it was 30. Because if the share could go from 10 to 30 to 1300, all within maybe 12 months, I had not seen anything like that before. Right? For me, 30 to 1300 would have been a 10-year journey, and it was happening in 1 year. I just didn't understand enough.
I want to flip it and ask you another question, which is relevant to the current scenario. Businesses which have a long runway, they have a huge opportunity. They have the ability to scale up. Growth is assured for a very long period of time. Infosys was one set business in 93. What people are telling today is that probably in their perspective, Zomato is the Infosys of today and that it could grow like that. Did you feel a similar thing in 93, 94, 95, 96?
Absolutely.
Those 4 years you were not able to perceive that.
Absolutely. I had no clue that they could be sitting in India doing the work and then they could be delivering in US. Remember, 93 was not such a great time for Infosys. It is only when the internet developed so much that you could do the work in India, deliver there, and then the margin started improving. So if you take the Infosys journey, it is not 93 to 2021 that you should see. You should see it in various stages. You know, the availability of internet, connectivity, the bandwidth meant you could do work from, look at this work from home now. You could be sitting in Kodaikanal, Coimbatore, delivering in Indonesia, delivering in Malaysia. This kind of technology, we couldn't understand how this would happen. I mean, I am one of those guys who was wondering how NSE would survive because connectivity was not so great.
Correct, in those days.
Yeah,
But you didn't participate in 93. You're saying that even year 1, 2, 3, 4 after listing, you didn't get their conviction. Having missed it last time, this clearly those who had invested have really made a lot of money. In fact, I remember going and asking a friend of mine who is an expert in computers and he had already worked for IBM and all that in US to tell me whether this is a good idea, because I was a student at the time and I wanted to know whether this company is a good company, and since he has domain expertise, he said, yeah, they're doing something, but who will pay a premium? The idea of paying a premium on face value was blinding him so much that he didn't look at the business. So I could form any assessment at that time, though I intuitively felt that new things should be tried. Do you feel now like trying a Zomato? I mean, since you missed an Infosys, right? Do you feel that maybe why not I try something new now and buy a little bit of shares and test the waters with a Zomato? I'm just giving one name, but there could be an array of such names because number of companies are coming public, some of them already in the public space, which are all new age businesses. Because this concept of a new age business in India is a post-90s phenomenon, and we are seeing the pace of increase of new age businesses now like never before. So now how are you viewing it? I'm trying to contrast the 90s when you just stayed away from even an Infosys, and now when you are having multiple options of new age business to choose from. How are you playing it?
let's face it, 1993, I was at a place when they were discussing how the hell will this issue go through, and the issue actually bombed. It is easy for people in 2021 to say how could the Infosys issue have bombed, but it bombed. I knew when one leading investment banker told me to buy Infosys at $300, I said, I know you have underwritten it. Or at that stage they had participated in the issue even if they had not underwritten it. It was scary to buy it because we were typically old fashioned. Do they have a factory? Do they have machinery and all that?
The lack of assets scared you.
Lack of assets scared me. I didn't know what was happening.
But
so that was
I'm
scary.
again coming back to the contrast.
Yeah,
Today the
again.
businesses which are all the new age businesses don't have any assets.
No, but Shyam, let us understand. We belong to the CCI era. I belong to the CCI era. CCI allowed only 15 rupees premium for Colgate.
Correct.
Right. I don't know what will happen to Infosys, but people will still brush their teeth in 2041, 2061. They will have. But only 15 rupees premium was allowed and people thought it was too high. It listed at 90. Then came SEBI and said you can price anything, but you should have a profit-making track record. Now they have said that is also not necessary. It is scary. To me, it is scary. Will I put money in a Zomato or any of these issues which are coming? Yes. Will I stake too much? No. Because I believe even if I put a small amount, say 2% of my portfolio, if it really does so well, it should do well for me. It may become 2% to 5% of my portfolio if it does so well. It's like a cryptocurrency. It's scary.
So despite missing that cycle, today you are not in favor of creating a concentrated portfolio of new age business, because a lot of young people who also work in new age business or are touched by new age businesses constantly in their life are contemplating this. Can I create a portfolio of only new age businesses, right?
You also have to
then
understand
that portfolio should be concentrated and have fewer bets. So that's what people are looking at. Would you?
No, I won't, because I'll tell you what, when I look at buying a big stake, I'm first asking 10 years later will they survive? 20 years later will they survive? And I know one thing, people will continue to shampoo their hair, people will continue to brush their teeth and take bath. Dull, boring businesses like the PNGs and Colgates will exist. Yes, they could lose market share to very aggressive Indian promoters. That could happen. It happened in case of pharma. It happened even in case of banking. That could happen in FMCG. There is no reason why those things can not happen. But at least that industry will not go away. In Facebook, I am seeing younger people are not coming to Facebook. They have a different model. They will make money. It's basically Google and Facebook are the biggest ad agencies in the world. They have 90% of world advertising coming to them. They will make money, but I don't know in what form. I'm more confident about, say, Google rather than about Facebook. But these are technology companies. They know how to ramp up. Today I can have that visibility. Maybe that is true for Zomato and Paytm and all that. I don't understand. Second, I realize that at this stage of my life, I can't afford to lose. So I've reached the stage and I say, I don't want to lose is step one. Then let me create more alpha. That's okay. Alpha creation is fun. But not wanting to lose is the base. So yeah, it's scary to look at new businesses.
So you're saying that I missed the new age business of 90s and I would not do concentrated portfolios with high position sizes in the new age businesses even now.
I won't.
What about the history? I want you to tell us a little bit about what happened in that blowout phase of 2000, because everybody saw over a very short period of time company valuations going up by multiples. Like the valuation went up by multiples, and naturally the PE ratios, everything went up by multiples.
Correct.
And then we started talking about PEG, which is price earning to growth, because that's the only way you could justify
Correct.
a company trading at 100 to 100. Today we don't have that problem with the Asian Paints and Pidillites of the world, but then there was a need to justify. Today people are just saying quality hai nahi, where will you go for quality? Therefore you have to
Keep
own this,
buying
which
this.
is a very
Yeah.
simplistic,
Correct.
inference and reduction.
Correct.
But then people were trying to bring in theories to validate or to justify high valuations. So can you tell a little bit about some things you observed in that period about the high valuations and how companies were trying to justify? You mentioned Silverline, but you can talk about even other companies where markets, analysts, fund managers, sales side, buy side, promoters,
Yeah.
everybody was trying to create a justification
Correct.
or a rationale for high valuation. Can you talk a little bit about that?
See, somebody bought at those high prices and took what 10, 12 years to recover their costs. Even in something like Wipro, if you had bought at the peak in 2000, I don't think till 2012, 2013 you would have made any money except the piddly dividends which these people were paying. So yes, people lost money effectively. So it was, but this creating theories is as old as the 16th century, right? The tulip theory was there. Then in 92, Harshad came with the replacement theory. How much does it cost to put up a plant like ACC today, right? Ultimately, I mean, I was part of the team which did the valuation for Ramesh Chauhan when he sold Thumbs Up to Co. I understood profits were the basis of creating future cash flow, and if there were no profits, I would not have known how to do the valuation. But today people are saying eyeballs. I remember. And I used to laugh even then, saying if you create a furniture.com,
Hits.
yeah, furniture.com, they said everybody will buy the furniture there. Then you created an IR.com and you said all IRs will buy everything there. Then you created charteredaccountants.com and said all chartered accountants will do their shopping there. What about the IR chartered accountant? Where was he buying furniture? Was not clear, right? He couldn't buy furniture from all three places. So one didn't understand why people would go and buy. And look, that time the only business I saw really making money was pawn. Nothing else was making money. Nobody else was making money. Rediff and all of them were losing money, but they were getting valuation.
Okay.
Which to us was a little surprising because SEBI had said anybody could value. So I don't think Rediff even got listed in India.
But institutional money was going in. If you recall, there were a lot of sectoral funds then which came, tech funds,
Correct.
funds which invest only in tech. I remember in 2001, I went to buy a car, and the friend was a dealer of a multinational Japanese company. So I was taken to his room, and he showed me a portfolio which was sold by a foreign bank. It had only tech funds, and he had put in a crore, which in 2000 was a pretty huge amount, and that crore had become 45 or something like that, 45 lakhs. And you're asking me, will it go further down, right? People had portfolios only of these new age businesses, the tech companies, and those portfolios were devastated, and it took a very, very long time to recover. But some of those companies were fantastic companies, good management, reasonable corporate governance, cash generating companies, and they had a lot of believability. Their disclosures, corporate governance standards were actually superior to the brick and mortar economy. At least you could name a handful. But there were some companies which are questionable, which destroyed the entire value created by these few companies.
Absolutely.
So even those funds, which are sectoral funds, didn't perform till the pain of all those bad bets went out. But the markets wanted to buy these other subset which destroyed the value.
Correct.
Did you see that happening? And what happened to the investors who bought the secondary and tertiary companies in tech? What happened to them?
Yeah,
and what happened to those companies?
When a company comes and tells you, please buy my share, what's the name of the company? Aftech Infosys. You know something is wrong because you're trying to copy, right? So why would you call yourself Infosys? Just because you're piggy banking on somebody else. So the names, the promoters were all enough to put off saying something is wrong with these companies. And you meet some of the promoters, you met every price they could justify as to why they're growing, how they're growing, why people are paying a premium. And I couldn't understand why an American company could not come and recruit in India and take these people and run it there. Why would they pay a premium for the work done?
You're saying why was there a body shopping PE?
Why
a PE for body shopping?
For body shopping, because it's not that American companies were not recruiting Indians. Indians were all going. So I didn't understand all that logic, and there were just too many frauds. Shyam, the chance of picking up a fraud was much higher than chance of picking up a good company. It's like, the automobile boom in US, 100 automobile manufacturers, today 3 have survived. So we can all see one HCL, one Wipro, one Infosys, maybe a handful of others. TCS was not there in that mad game. Probability of picking only these 3 was very low. I would have definitely picked up Silverline, I would have picked up a lot of other things, and on an average, I would have made 7 or 8%. Because you would have made a fantastic 24% here, and you would have lost a lot in the other. So average, I still would have made only that much. So even today, I don't have great regrets, because I know the 10,000 rupee to 750 crore valuation of Wipro, I would never have been able to write the full journey, right? Somewhere I would have panicked and said, this is too much, I would have sold.
And what about the present? We are having similar trends where you have multiple companies, you're going to have a flood of IPOs, you had a very decent number of IPOs which you have already listed. How do you think this current trend will play out? Because many of these companies are not making profits, they're all trading at revenue multiples.
I think it's going to be worse, okay? Because none of these are entrepreneurs coming for money. Please remember, this is OFS. In most of these cases, it's OFS. And OFS is obviously overpriced. Look at ICICI Securities. They came at 540, and when they asked me, I said it will be a great buy at 270. It actually went to 270 and slightly below that. Right? Every OFS is greedy pricing. So I'm worried more about the greed in the price. It's not an entrepreneur saying, give me money, I want to put it in the business. This is a guy saying, I have put in the business, I made a right choice, I've grown it, now pay me premium for my selection process. Why am I paying a PE, a high PE for a guy because he took the risk? Let him participate. He's selling, that's scary. The employee is not participating, is scary. So you are getting conflicting signals. It's not that you're getting a signal that it's a great share, everybody should buy. You're getting conflicting signals. You hear people leaving and coming out and saying, corporate governance doesn't exist, women are treated badly, this is happening. So I mean, today I'm hearing more noise than I would have heard in 2000. I was younger. I didn't. So today you hear from the venture capitalist, the PE guy, the promoter, from everybody. I'm not hearing unmixed signals. Right?
Clear signals every day.
Clear signals you're getting that staying away won't hurt you too badly. Because I think the cream has been taken away. You're left with something. It will grow. Maybe it will give you 8.
Your point is that the selling shareholder is leaving very little on the table.
Absolutely.
In fact, he is not leaving anything on the
In
table.
fact, the selling guy is much smarter than the buying guy. I am the buying guy, and I know the guy who is selling knows how to time it, knows how to price it, knows how to talk, he knows everything.
And what about the guy who buys on the listing?
He's even worse, right? So I buy it at IPO. Like, so let's say the IPO is 125. I buy it 125 and it lists as 225. The guy buying at 225 is taking even greater risk. So how much risk do I want to take on listing? Nothing. Do I want to apply in the IPO? No, because a good one I will not get. A bad one I'll be stuck with, I won't be able to sell. Like Reliance Power, right? 450 to 0. It's an amazing value destroyer.
Correct.
People have to understand wealth destroyers. Studying failed companies is very important to know why companies succeed.
Okay. So, you say that things haven't changed. Even today, a number of these companies may not survive. The money is going to the pockets of the selling shareholders. They are taking the bulk of the money. Money is not going into the enterprise to create value. These are some of the observations that you have made. And where do you see this trend in the next 1 or 2 years? Do you see this trend changing for the better or worse, or staying the same?
Our regulator will start acting after the retail investor has lost about 50,000 crores. So to me that will be an indicator when these people will be screaming and the regulator will come back and say it has to be a profit making company, OFS this price cap, some such thing will come. So 50,000 crores would just mean 5 companies.
Okay.
I don't think the 6th company will be successful.
Alright. So you're saying that caution is the watchword?
For me, I mean,
for
some youngster who wants to take a risk, it's different.
And you are not looking at those concentrated investing or stuff like that. You would rather just wait, see how this plays out, and then form an informed judgment. On that note, we end this video, and let's talk about some other phase, some other time, some other trend in our next video. Thank you, Subra.
Thanks.